Tuesday, September 7th, 2021, Monaco 64, home of alternative economics and contrarian views. I don't want to sound alarmist, and I actually think in the long term it's a good thing, but I think we are in the throes of a CrackUp boom. Some of you might think that could never happen. We could never have a hyperinflation because this time it's different. This time we've got very clever PhD central bankers, but I've been a student, as many of you know, about the hyperinflation of the currency. Historically, I've done a lot of research. I've recommended to a lot of you, of course, or to all of you, to read Fiat Money, Inflation in France by Andrew Dixon White. I've recommended When Money Dies by Adam Ferguson. I've recommended you look into the Austrian School of Economics, into Human Action by Ludwig von Mises, also into Murray Rothbard and what he says about hyperinflation. And yes, I started seeing symptoms of it many, many years ago, probably really after the '08 crisis, when our central bankers and politicians came out with stimulus, monetary especially, in the form of QE or money printing. They came out as well with bailouts from the fiscal side. And last year they did the same, more and more QE, more fiscal stimulus going directly now to consumers, not just corporations. And CrackUp Boom is not just about the currency collapse, not about just economics, not about just supply and demand and inflation. It's an environment, social, economic, political, where things are just completely alien to us. And if you tell me that things are normal, have been normal since the beginning of last year, you probably have been asleep like Rip Van Winkle and you've just woken up. And I think more and more of the things I see on the economic side here in the last week or so are pointing to a CrackUp boom. Yes, people are going to say, oh, it's only because of what happened with the health crisis, with what's happening. It's the supply chain, but they don't look at the bigger picture. They don't see that politically and socially, people are losing complete confidence in our so-called leaders, political, scientific leaders as well, medical leaders. People are losing confidence, of course, in the media, mainstream media. And that's a big part of the CrackUp boom. When people lose faith and confidence in the whole edifice of society, people are losing confidence, of course, in the central banks. They seem to be in major denial about inflation. They call it temporary, and we're continuing to see price rises. And hyperinflation is not a cost push inflation, as von Mises and the Austrians talk about. Hyperinflation happens when the general public, or a big part of the general public, realizes that the authorities are not going to stop inflating and that prices will never come down again. And when that happens, they lose faith and confidence in the currency. And it's not just consumers, it's also producers. They stop producing. Also labor. Labor requires more for performing their end of the bargain. Well, that means higher wages. And I think we're seeing all that in spades. And I would say, unfortunately, I've never seen this before in the West. I grew up in Brazil. In 1987, I'd been studying abroad, so I wasn't in Brazil full time, but I remember when we went back and my father and I were preparing for a boat trip up the coast of Brazil into the Amazon. My dad loved his boats, and we did this trip. And I remember stocking up in Rio for the trip. And the shelves in the supermarkets were empty. And of course, we had a currency collapse at that time. Yeah, things weren't great, but Brazil survived, of course. But it's going to be very disruptive. The plus side, the silver lining, I think, for a CrackUp Boom is that this fiat currency system that we've had imposed on us, this debt-based system where the measure of value fluctuates every day in a multi-trillion-dollar FX market based mostly out of London, is going to go away. And we're going to have a monetary system that's based on real tangible wealth, on a fixed value of gold and silver. I think we'll have to go back to that. If not, we're going to have a Mad Max world. People are going to be bartering a lot. A lot of people are going to perish, unfortunately. And I think, yeah, that's the plus side of the hyperinflation, that you basically, there's a revulsion and a complete collapse of the currency. People say, we don't want this anymore. You're using this currency to basically extract wealth from the public, because that's what a fiat currency does. Have you wondered why there's so much wealth inequality out there? So I'll stop here and just show you why I'm talking about this today. I'm seeing a lot of headlines that are basically catastrophic. And it's interesting because if you read When Money Dies, the word catastrophe in the early 20s, Weimar Germany, became very common, because a catastrophe doesn't happen very often, but under a hyperinflation or CrackUp Boom collapse, it becomes more and more common. So I would say we are in such a period, and I could be wrong, but I think it's still the right thing to do, to have gold and silver outside the system, to have tangibles, to have some surplus of the things that you need every day. Yes, if you're able to have a bug out place, that's great. Not everyone, the majority of us can't do that. But yes, buy more of what you need. So let's look at the first article that caught my attention yesterday. This is the FT, was the main headline online. It says, consumer demand must ease to end supply chain crisis, says Maersk executive. Only way to end vicious circle of shortages is for people to buy less, warns head of port operator. Well, you see, the head of Maersk, which is a big Danish company, I think shipping company, he doesn't know about the CrackUp Boom. He's just looking, he's looking at a tree and not the forest, and he thinks, oh, it's people buying too many things. They have to stop buying. Well, maybe it's that they don't have faith and confidence in the currency. Why don't you, Mr. Maersk, I know his name is not Mr. Maersk, but why doesn't the Maersk executive decide about building more ships so that they can ship more goods, so that the supply will be there? There's another one here sent from one of my Patreon supporters. It's a Reuters stories. It says, rats, drought, and labor shortages eat into global edible oil recovery. You will notice, of course, they will never talk about the bigger picture here. It's always about shortages and lockdowns and supply chain, but it's all out there. Another one that I saw a couple of days ago, I think, and it's in the FT, it says, UK faces 2 years of labor shortages, CBI warns. That's the Confederation of British Industry. It says officials have told business they should use British workers rather than expect rules to change. Yes, there's a big problem with the truck drivers here in the UK and in Europe as well, in the continent. They call it here HGV, heavy goods vehicles. That's how they call a truck. I see that in the US, there's a shortage of truck drivers too. I saw there's an article about a month ago on Bloomberg. A trucking crisis has the U.S. looking for more drivers abroad. So this is not just people here in the UK are saying that this is about Brexit. No, this is the fact that we are in a CrackUp boom, and the whole economic machinery has been disrupted by the central bankers and the politicians. They thought, or they've been thinking that since 2008, that they can just create all this phony currency and spending and borrowing out of thin air, and that it wouldn't have a consequence. Well, the consequence is coming home to roost now. And in the German hyperinflation of 22-23, it was something that started in 1914 because of another crisis that started back then. It was, of course, World War I. And the German government was one of the governments that really pumped up the fiscal spending, the monetary printing, the central bank. And it took 8 years for it to show up in 1922-23. And yes, I would say that's quite a long time, considering all the mayhem that was going on back then. And the other thing that people forget, in the aftermath of that war in 1918, Germany, Central Europe, Austro-Hungary, the Austro-Hungarian Empire, all that collapsed. The German Empire collapsed. The monarchies collapsed. There was political mayhem, social upheaval, pretty much like I see today. With all the protests going on around the world, especially in Western Europe, Australia. I mean, yes, of course, the mainstream media, which we don't trust anymore, and I don't trust, I haven't trusted for years, is not reporting on that, but it's out there. So that's the other thing we need to consider. It takes a while, but I think we are at the point where we're starting at it. And on the 31st of August, I did a video about the CrackUp boom, and I said that once it starts, it's very hard to get out of Dodge. And getting out of Dodge, I mean, protecting yourself, your savings, if you have your savings in the currencies that are going to collapse. And it's not going to just be the fiat dollar, it's going to be every fiat currency out there. And now I'm going to reference Rafi Faber and the Endgame Investor. I'm going to put a link to Rafi's details below in the description. I highly recommend his newsletter. He's got a 2-week free trial if you want to try it. But on September 5th, he talked about another shortage that's going on, and this is in the US. And it's all to do also with the chip shortage in Asia. But I think it's all part of this CrackUp boom where consumers, producers, they lose confidence in the currency unit. So you can see here, used car prices will continue to climb. So he's got here some charts about auto inventory per sales ratio, and he's got also domestic auto inventory in the US. It's almost down to zero, the inventory. And he also says it's not the supply lines, it's the money. And why does he agree with me? Well, because he's studied the Austrian School of Economics. He says Wolf Street, that's the Wolf Street report, had a very good line that crystallizes in Austrian why this is not an issue of pandemic shortages or supply line chaos. It is, in a sense, yes, but you have to look at what's causing it. Here's the line. So he's quoting here Wolf Street. Wolf Street says, pricing regulates supply and demand, as higher prices normally boost supply and slash demand, but free money has destroyed the pricing mechanism, and demand has soared despite much higher prices. So there you go. That's the other thing as well. Despite the higher prices, we can't get supply. So now I want to show you what happened in Germany and how it transpired, and why I said about a week ago, maybe a little more, that once the CrackUp Boom starts, or the hyperinflation starts, it's almost too late to get out of Dodge, as I said. And here's a chart of the paper mark versus the gold mark. It could have been a chart of the mark or paper mark versus the dollar as well, because the dollar was as good as gold, of course, in that period. Yes, $20.67 was 1 ounce of gold, and it didn't change. That was a fixed weight, and that's how money should be. So you can see here that after the end of the war, and it would be nice to see how it was before 1918, but I would say it was pretty relatively stable. But they started inflating the system and money printing and fiscal spending for the war in 1914. So that had been going on for 4 years. And it wasn't until really the middle of 1922, as you can see here, that things started getting really ugly for the currency. And that doesn't mean the currency is going up. That means the currency is going down versus the gold mark. So that means you require more and more paper marks for whatever weight of gold 1 mark was. I'm not sure how much that was, but that's irrelevant. But it just goes to show that once it starts, it's really tough. And that's why right now I think worrying too much about the fiat price of gold and silver is dangerous. Because let's say someone in Germany bought gold marks, sold the paper mark back in the summer of 22 below 100, and then when it got up to like 10,000 in the beginning of 23, if you said, wow, I've done really well, I'm going to get rid of this gold now, well, you'd be kicking yourself a few months later. So that's what I'm trying to tell you here. It's a very dangerous period, I would say. You have to hold on to your tangibles, any tangible, and monetary tangible in my book is gold and silver. You can see here as well that the stock market had a CrackUp boom. So, and it started around the same time, middle of 22. So, but at the end, when the stock market topped, the currency was worthless. So you need to weigh the pros and cons here. So am I saying the stock market could go through the roof? Yes, definitely. In a CrackUp boom, it could. So I, as being a student of hyperinflation, and a lot of people have laughed at me, or not laughed, but made comments in the last few years when I speak about hyperinflation on my channel. It will never happen. You're crazy. It's not the same. But having studied it and known about the symptoms and what happens to society, the economy, and the currency, I'm more and more convinced that we are in the throes of the CrackUp boom or the hyperinflation. So with that, let's quickly look at where the markets are this morning. It's just before 9 a.m. London time. We've got spot gold, 18.18. It's down $5. Range has been 18.27 to 18.15. You still have a chance to get out of Dodge. right now, if you can find some gold and silver out there. I'm not too sure about the premiums right now. They're probably still fairly high, but I personally wouldn't waste any time. Is this advice? No, this is just what I think. Silver is down 10 cents at 24.56. Range has been 24.49 to 24.84. The Dow futures down 45. S&P futures down 5. NASDAQ 100 futures down 18. FTSE futures down 15. The pound is unchanged, 138.33. The euro is up slightly, 118.73. The dollar is unchanged versus the yen, 109.90. The dollar is up slightly versus the yuan at 645.38. Aussie dollar is down 0.2% at 74.27. And the dollar is up 1/8% versus the Canadian dollar at 125.50, and the Kiwi dollar is down 1/8 versus the dollar at 71.26. Yes, the currencies will fluctuate against each other, but in a CrackUp Boom, they will all perish. And by perishing, I mean their value will go down substantially versus tangibles. People might lose confidence in them. Maybe that's when the central bankers will try their digital currency. I don't think it will work. I'm gonna stick to my gold and silver. I would say cryptocurrencies, the way they've moved up over the years, is another symptom of hyperinflation. And why have they moved much more than gold and silver? Oh, because the powers that be have more control of gold and silver. So they don't have as much control of the cryptocurrencies, but in the end, they'll lose control of everything. WTI crude is up 1/3% at 68.93. High-grade copper is down 1.3% at 426.80. Natural gas is down a little bit today. It's down 1/3%, but it's been rising quite sharply. It's at 469.20. To finish off, let's have a look at where the 10-year yield is. 10-year yield is at 136. It's up 3 basis points. And what would happen to the bond markets in a CrackUp Boom? Well, you know, the Fed and the other central banks might be able to keep their artificial yields as they are, bond prices high. But if the currency is collapsing, the bonds are collapsing as well. Because the currency is the common denominator of everything. We need a currency to do anything in an advanced indirect exchange society. Of course, the alternative is barter, and I think that's going to be increasing quite a bit more, exchanging value for value without the money. It's not as easy because you've got to find someone who wants something that you have, and that other person must have something that you need. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to this channel if you haven't yet. And if you do, make sure you hit that little notification bell to be notified of all my new videos. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.